Welcome to Investomania, brother. Boom! Today, we're talking about paper trading. Now, a very common piece of advice thrown out in the investment world is to paper trade before you use real money. Paper trading is essentially using pretend money to do your trades first. The idea is you want to show a profit before you use real money. But I would like to present a different view. Now, if you want to paper trade, hey, that's your prerogative. However, I would not recommend you just let your money sit wasting away being eaten by inflation every day. If you personally don't feel comfortable using real money and don't want to use real money quite yet, then here is my recommendation. Just put your money in either an S&P 500 tracking index or, and by the way, for the S&P 500, I'd recommend the SPY, ticker symbol SPY, or a NASDAQ 100 tracking index. And for that one, I would recommend the QQQ. These are both relatively safe places for your money long term. You may see short and moderate term drops in your investment lasting up to potentially several years, and I know that can sound scary for a new investor, but if you are running the potential risk of investing in any stock, hey, you're going to have probably less risk investing it in the QQQ or the SPY. And in the long run, investing in these two options will prove to be fruitful, much more so than most new investors will be able to get investing in individual securities. Hey, that's another word for stocks. Plus, both investments are extremely liquid. That means you can quickly get in and out of these investments for extremely small transaction costs. Now that's provided you're using a broker like Robinhood, which has no broker fees. When you feel ready, you can sell some or all of that investment in the QQQ or SPY and buy 1, 2, 3, or a whole bunch of individual securities. Again, that's stocks. So long as you have your spare money invested in the SPY or QQQ, I don't mind much what you're doing in regard to paper trading. However, here is an argument against paper trading. I personally have never used paper trading, and I was never really interested in paper trading. Why? 2 reasons. Number 1, unless you're day trading or doing something very short term, which I would strongly recommend against for new investors, it would take many years to determine if you're actually beating the market or not. There is so much luck involved in the short term that paper trading just really isn't all that useful in telling you if you're beating the market or not. Showing a profit or beating the market for a few months or even a few years could easily just be written off as luck. Similarly, just because you are underperforming the market for a few months or even a year or two does not necessarily mean you're doing anything wrong. It could just be bad luck. Most people who paper trade only do it for a couple months or less. And a lot of the time, those guys end up getting bored and stopping investing altogether. They never even get to real money because they lose interest before they get to that point. This doesn't help you very much. If you were to paper trade for, say, 5 whole years, well, you might have learned if you can beat the market or not, but you weren't invested in the market during that time, and you would have missed out on a massive gain, statistically speaking. Of course, we can have multi-year down runs, but statistically speaking, the majority of the time, you're going to lose out on a pretty large gain if you would have just been invested in the SPY or QQQ. Here is my second reason for not liking paper trading. It's not the same as using real money. It just isn't. I learned this back when I was a teenager playing online poker. The difference between pretend money and the absolute cheapest real money cash games that most poker websites had was 1 cent, 2 cent. And the difference between those two, the cheapest real money, just literally 1 penny, 2 penny, but fake money, the differences were massive. People played completely differently. When the money was fake, the players didn't care. It was fake money. They can go reload their fake money 1, 2, 3 times a day. They were willing to gamble. People would even write in the chat boxes, it's just, let's gamble. It's not real money. It's just pretend money. I can go reload. They didn't care. But the second that money became real, it didn't matter how small the stakes were. The players cared. Relatively speaking, obviously, there's a difference as the stakes go up. But I'm saying the largest difference that I found wasn't between 1 cent, 2 cent, or 2 cent, 5 cent, or 5 cent, 10 cent, 10 cent, 20 cent, right? It wasn't that. The difference was between nothing and 1 cent, 2 cent, because that was the difference between people who were just having fun, just gambling. They didn't really care about the outcome, to where now the people, they weren't very good. They weren't very experienced, but they cared about the outcome because it was real money. I found this to be extremely true myself. I couldn't get excited about the fake money. It wasn't real. It didn't mean anything. You win, you lose, doesn't matter. But the second I switched over to the lowest amount of real money, the 1 cent, 2 cent games, even though the stakes were extremely small, I cared. When I lost, I felt it, even though it was just a couple pennies. I was so much more thoughtful about my decisions because there was a whole 25 cents riding on the line in that pot. I started studying the game more because now I had real money at play to win and lose. As time went on, I demonstrated an ability to be profitable at these smaller levels, and I felt more comfortable, and I gradually moved up in stakes. I believe the same is true for stock investing. Most people, myself included, will not be as motivated to learn about investing if we are using pretend money. There is something about having real money on the line which changes everything, even in extremely small amounts. It's why someone can buy a $1 scratcher or a lottery ticket and get excited, or bet $2 on a horse racing event and all of a sudden care who wins, or play 1 cent, 2 cent poker and actually try. Real money changes things. I would never suggest a beginner throw down his life savings on a couple stocks that he handpicked. However, I would suggest taking a small percentage of your portfolio based upon what your desires are, your risk tolerance, and searching for 1 or 2 companies you believe in that have stocks which are cheap enough for you to afford, and making a small investment. For example, let's say you are a newer investor. Let's say you got $1,000 in your portfolio, but you don't just want to throw it all in the SPY or QQQ. And by the way, I think that's probably statistically the best thing you can do, but I understand we're trying to learn for the future. So let's take a little bit of that money and pick a stock. Maybe we'll screw up, but it's a small amount of money. It's okay. We will learn much quicker by making a mistake with a small amount of real money. And plus, hey, we might actually make money. Right? So maybe we take 900 to 950 of that $1,000 and we put that in the SPY and or QQQ. But then we take the remaining 50 to $100 and we pick 1, 2, 3 stocks which have relatively cheap stock prices because we can't go and buy a share of Amazon, right, for $2,000. We don't have that much money. But we'll buy 1, 2, 3 stocks which have relatively cheap stock prices and invest that $50 to $100. If you want to be more conservative, then maybe let's place 975 plus of the dollars in the 1 or 2 index funds, and then let's look for just a cheap $25 per share or less stock, and just buy 1 share. So that way, at least you have something on the line that's real. I can tell you, I can guarantee you, you will learn more and care more by owning 1 single real share of stock, even if it's just $15, than you would by trading hundreds of thousands or millions or billions of dollars worth of hundreds of fake stocks with fake money. The same concept goes for trying a new type of trading once you become more experienced. Maybe down the line, you want to try options or futures or shorting or buying microcap stocks or day trading or technical trading or trading earnings, etc. Whatever it may be, provided any applicable fees don't make it infeasible, right? We always have to take into consideration fees. But provided the fees won't eat up all of your investment and make it a bad investment from the get-go, just from a fee standpoint, use real money. Just use a very small amount of real money to test it out. This way, you will care more, do more research, and learn more.
That's the bottom line, because Stone Cold said so.